Hello everybody, my name is Mark. Welcome to another one of my investing videos. And in this video I'm going to show you once again why stock options are so much less risky than buying stock. Now let's take a look at my account here. I'm sure if you're watching this video you are very well aware of what happened to the stock market in the last couple days. This here is my account, and let me go back to September, hit the view. And here we go. Right here on September the 10th, I bought one call option. It's a $30 call at $7.70 times 100. So I spent $777.71 for one contract to buy Twitter at $30 a share. And that is all the way good all the way until January of 2020. So 16 months from then, and cost me all of $777. And then you can see these green numbers, green number here, green number here. I have been selling call options week after week, bringing in money, and that money goes towards paying off this premium that I spent. So I've made so far, let's see, 50 minus 3, bought it back for 3, so 47, plus 48, 95, let it expire to 0, and then another 28, 123, bought it back for $1, so 122. I'm rounding down and up obviously, and then another 34, 155, bought it back for $1, 154, and now this one, 40, 194. So I made $194. That's almost $200. So 777 minus 200 would be 577. So let's just say I have another $600 to go. Okay, and I still have another like 14 months left. Now, let's take a look at what happened to Twitter here. Okay, this website right here, TradingView. Let me pull up my drawing tool, and right here, this little part right there, that's what happened yesterday. Actually, now 2 days ago. Today is the 12th of October, and the whole market sold off, and Twitter was one of many stocks that tanked. Went all the way down from like 29.50 all the way down to, at one point it was even down to 26.50. I mean, that's like a 10% drop all in one singular day because of the sell-off due to the rising interest rates in the Federal Reserve, and a guy named Colin Powell who came out and said we're going to keep raising the interest rates, and investors didn't like that, blah blah blah, right? Nobody knows what's going on anywhere anyways. It's all guessing games, especially for a schmuck like myself. I'm just guessing and guessing, you know. So anyways, back to my account here. I bought one call option for $777, and this is it right here. Okay, and so it is a contract to buy Twitter at $30 a share, and obviously I was very wrong, wasn't I? Right? Now imagine had I would have bought 100 shares of Twitter instead. Okay, imagine had I would have done that. Now, first of all, that was on September 10th, so let me go back to my chart and let's look at September 10th. This is a 1 month chart, so I guess I gotta extend it out because I can only go to 11. So let's look at September the 10th, and here's September the 10th right there. So it looks like Twitter on that day was at about $30 and some change, maybe $30.50. So let's say it would have been at $30 a share. Okay, we'll round it down just to be nice and safe here. It would have cost me $3,000. Okay, and so back to my account. Right now, Twitter. Let's look at pre-market here. Let me pull it up. Come on, slow computer. Come on up. There you are. So in pre-market, looks like it's recovering a little bit. $27.77. So if I would have bought 100 shares, I would have spent $3,000, and now I would be down to $2,777. So I would be down $220. Okay. Now let's look at my call. Okay, my call right now, the bid. Let's look at it here. The bid is, this is my call. Actually, I got to go back to the other screen. So let me go back to the other screen. The bid is 450. The ask is 530. So let's say I get it in the middle, 480, let's say. And I spent 770. Okay, that would be a bad thing, wouldn't it? But because I've been selling weekly calls, first of all, that would be what, 770 minus 480, that would be $290. But look at this call right here. This is a weekly call that's worth all of $1. Okay, and that was my last call. Let me go back to my transactions here, and let me pull up September, since that's when I first bought the call. And so this right here, this, which I got $40, now I can buy it back for $1. So I'm up like $39. So I added all that up, and that's another $190, I think. $200 something, 50, 98, 125, 159, 199. So let's just say $190. Okay, so $190, and I was down. Let me go back to my other account. I was down 770 minus 480, 290. So I'm down $100. Okay, so instead of being down $220, I'm down $100. If I would have bought 100 shares of Twitter at $30 a share, which it was actually higher, but I'm rounding it down, okay, I would have spent $3,000, and I would be down to $2,770. Okay, so that would be like a $230 that I'd be down. But instead, I'm only down $100. Okay, so I've cut my losses by more than half. Now, if you would have bought the stock, you're putting up way more money, $3,000, and if Twitter keeps going downtown James Brown or whatever, if Twitter goes down to $20 a share, maybe it will. Maybe this is like the beginning of some really bad stuff. Who knows, right? Then $3,000 turns into $2,000. But the most money that I can possibly lose is the money I have left on this call. So if it does go down that low, then I could lose another $480. So I think I can safely rest my case. Okay, stock options are less risky than stocks, number one, because it takes way less money to buy one call option contract. Call option is a contract to buy a stock than it does to actually shell out $3,000 to buy 100 shares of a $30 stock. Way less money. Okay. Number two, if the stock tanks, which Twitter has been doing thanks to this sell-off, if the stock tanks, the money that you lose is a fraction of the money that you would lose if you actually own the stock. Okay, so two big reasons why stock options are so much less risky. And reason number three, if you invest in stock options, right, going back to my transactions, you don't have to just, let me pull up September here so we can get the whole story. And here we go. You don't have to just buy a call. You can sell calls and sell calls and sell calls and sell calls and sell calls. If you know how to buy and sell calls, you don't have to just buy a call. If I would have just bought the call option, then yeah, I would be down more money. But because I understand that you can also sell calls, and then that money goes to your account, and the upside risk is non-existent, because I've explained in other videos that if the stock does go higher than the strike price of your short call, you can roll it up at a credit, or you can even roll it up at the same strike price and just collect more premium on the same call week after week. So there's no risk on the upside. The only risk, and I think I said this in my first couple videos, the only risk that I'm taking is if the stock tanks, if the stock goes down to 25, 26. Well, that's what Twitter did. And I did lose a little bit, but compared to how much I would lose, there's no comparison. I'm so happy that I bought a call option. and I wasn't, I wasn't naive enough to actually buy a stock. Okay, I'm so happy that I bought a call, cutting my losses down to a fraction of what I lost. And I still have another, what, 14 months to go, 15 months to go before this long call expires. So week after week, I am going to continue to sell call option after call option, and eventually, not only will I not lose money, I'm going to make a load of money on a $777 investment. I mean, if you think about it, today is the 12th of October. I bought the call on the 10th, so that's a month. So in 1 month, I've made, what did I say, $190? So 4 weeks in a month. So if we take that and average it out, how much I'm making per week, that's like $45 a week that I'm making. Now, if I can make $45 a week every week for the next 15 months, well, do the math for yourself. How much money am I going to make, 15 months from now, week after week after week, if I'm able to make $40 a month? I think I can rest my case and say I will continue to buy and sell call options, and I will not uh, waste another second of my time shelling out so much more money to buy a stock. The jury is out. I rest my case. Stock options are way less risky and more profitable than stocks. Thank you for watching this video. I hope to see you in the next video. Have a good day.